Hey guys, what is up? It's Dusty here, and welcome back to another episode of the Daily Crypto News. To start it off, breaking news. Soros Fund Management, the family investment firm managed by billionaire George Soros, has been given the green light to trade Bitcoin. This on its own is a really extremely very big deal. Nice watch, that's one thing that's a little bit of a side note, but no. This is one of those announcements or pieces of content that nobody can see as a bad thing. We all know these institutions are coming in, but these really traditional guys, for them to hop on, it's just, it gives me goosebumps. I don't know how else to express it to you guys. Then Crypto Airy just elaborated a little bit on the Ripple Hamamatsu Iwata Bank. She said over on Twitter, this could have just been a news article that she basically expressed, but it's Twitter, all right? Sometimes what we cover on Twitter is actually the news, but whatever. SBI signed agreement with Hamamatsu Iwata Bank to use Ripple Net technology for international money transfer service business starting July 12th. SBI's mission is to provide financial institutional services centered on remittances to foreign residents in 12 languages. Hamamatsu Iwata Credit Bank is in a region of Japan that has a very high Brazilian population. Do I think XRP ODO to Brazil will happen? Well, I would say you can count on that as the corridor usage builds out. #0doubt. Yoshitaka Kitao, nice work. And one thing that's really important to understand is, first of all, SBI has explained in a couple of different places, now together with the bank here as well, that they want to expand Ripple's technology. And also from a different perspective, they want to help XRP grow. Yoshitaka Kitao has actually said before that he thinks XRP can get to $10 per coin quite simply. From that perspective alone, you should understand that if Yoshitaka can make it so that XRP will get used, he most likely will, because it's also in their best interest to see Ripple grow through the use of XRP, as that's again their main thing. Now then, something I saw was that there's actually Twitter NFTs now. They just started out with a couple of new pictures, and well, you can't really deny it. You can't really go around it. If you open your Twitter, there's a good chance you saw them because they have basically been selling them, or at least they're going to sell them or something like that. Not exactly sure what the purpose of that is going to be. I saw an article, but I didn't press it because I frankly don't really care about it. I'm not going to buy it, nor am I going to compete. Most likely these things will go for hundreds of thousands of dollars. And even though I think that these types of NFTs, so things which are digital content, actually have more longevity, you don't know how much they're going to make, as there's really not that much of an agreement, and you don't know how special this is going to be until the space matures a little bit. Art from a lot of these famous people only got popular partially because you also now know that there's some scarcity and they won't be able to just build 1,000 or 10,000 more. That's another fun fact with Twitter here. It could be that they say rare form. That's it. That's the logo. It could be that they're going to make 1,000 of these. 10,000, 500,000. So if one of the first persons paid $1 million for it, well, it might have not been rare at all. The only reason that thing is then valued as at $1 million is because somebody paid for it. And that's again the fun part. You need somebody to buy your NFT again. As of this point, you buying an NFT for $10 million gives the NFT the value of $10 million. But that does not mean that somebody will actually take it over from you at that same price, if not more or less, just at all. It could literally be that some of the Beeple artworks, for example, will never be resold for anywhere close to the current value because nobody would ever think of paying that much for it. It's just to set kind of a market up for itself and give it some popularity, but that does not mean it's actually the value it should have. It's not where demand and supply come together. It's just where somebody just came, where somebody was like, yeah, I want that. It's not really a normal demand and supply curve. It's like a normal demand and supply would have maybe put it at, let's say, a $1.1 million for the $69 million work. But somebody's like, you know what? This whole line thing, no. I'm going to overbid you by a long shot. And that's maybe what we're going to see here too. People just paying a lot more than they actually should be. Unless, I guess we'll see, right? I guess we'll see. Moving on, leading Ripple Counsel says the SEC has created a regulatory morass. To be honest, I've explained it so many different times, the SEC has not been doing their job properly. I firmly believe that the SEC is to a certain degree biased if not corrupt. And that really is strange for me to say, because I do not believe we can actually say any of these entities are officially corrupt. Even now, I will always say it with at least half of my thoughts in doubt, because you don't know exactly what their stance is, nor what exactly they're alleging another party of, nor if what we know about something is completely true. In the current Ripple versus SEC situation, the facts that have now been presented really make it seem as if the SEC has made an allegation against Ripple and two of the key members of Ripple without really any good reason to do so. It's basically prejudiced because they have already given a verdict on Ethereum and Bitcoin, yet they haven't really given that verdict out to the public. Now, a new document has also stated that even Ethereum's status is not really confirmed, and it's also just, I believe, the fact that the SEC is keeping so much stuff hidden, hasn't really given a proper framework, nor are they trying to help companies do well in this cryptocurrency space that are making people prejudiced against them without knowing the full details of the case. But even though I know the majority of the details from the case, and a lot of you guys watching these videos know, it's just not looking good for the SEC because they're not trying to make it look good. Had they put up all their facts and it just showed that Ripple was violating one after another of these rules, then I would have maybe been on the SEC side saying, yeah, Ripple should get a big fine and maybe some stuff is wrong. But that's not the case. The SEC hasn't given any public information or information out to the public. They haven't publicized anything relevant that we might want to know or that might help us make a new judgment on cryptocurrencies. No. Still, as of this point, if you want to make a crypto company, you cannot know what is right and what is wrong. And that's the freaking most stupid part out there. They might come after you in a couple of years from now, say you were actually selling securities, where even they, as they've expressed now a couple of times before, do not know whether or not it actually is at this current point. You might also come back, like Ripple did, and say, whoa, we weren't given fair notice, which again is a really solid defense. But even that one, they're going to try to destroy. As we've seen now with the Ripple case, they're trying to destroy Ripple's fair notice defense, which I think is proper. I think the SEC will have to kind of suck it up that they haven't given companies fair notice that a lawsuit like this was going to be coming, or from a different perspective that they were doing something wrong. As even now to this day, months after the lawsuit has actually been filed, I still wouldn't know what cryptos exactly are securities and which ones aren't, because if XRP is a security, then what exactly is it based upon? You might say, oh, the network, you might put up a lot of different arguments, but then if that's the case, is Ethereum a security? If you're saying no, then I don't know what you're talking about. If you're saying yes, okay, then I guess we can kind of debate. But then maybe every crypto is a security. But then if every crypto is a security, then there's inherently something wrong with the system. So what the SEC has done through the lawsuit here is make it really unclear to us what exactly is right, what exactly is wrong. And they've also kind of showed some conflicting interest, which has made people wonder if the SEC is really so true to heart as they always claim. And also from a different perspective, right now, nobody knows if Ethereum is actually properly regulated, if Ethereum can actually be on exchanges or not. It's all so freaking difficult to follow. And I'm personally also at an impasse where I'm not sure if I think any of this stuff is going to be official or if it's just all hearsay. Because, well, I thought it was all arranged properly for Ethereum, but now that it came out, it wasn't. Now, I don't really know if anything is sure anymore or certain. JP Morgan's Bitcoin depreciation projection gets backing. Price bubble expected. Investment bank JP Morgan Chase have informed Bitcoin investors that the most popular crypto will still crash below 30K, and other analysts support this forecast. One important thing to understand here is that I've expressed before, JP Morgan was switched sides, and there's many different analysts out there working at JP Morgan who have contradicting views. So please guys, don't just use one analyst at JP Morgan to direct your vision. They are not, I guess they are officially financial advisors, but from a different perspective, they're just doing an analysis on what they think. It doesn't necessarily have to be correct, and they're all contradictory, so don't take it at one and go straight off that. Use maybe different analysis to build a good little, I guess, situation, or how do you say that? Build a good idea of what everybody is thinking, instead of just going off from one and then making up your entire mind off of that. This article was Bitcoin Gold Inflation Hedge Investing Crypto. Let's quickly see what the article title was again. A top currency investor at a $1 trillion. I could have put JavaScript off, right? And I could have gotten behind this paywall, I think. Not sure that's the way I should do it, but I could have. A top currency investor at $1 trillion inside investment breaks down why Bitcoin isn't the new gold. All I wanted to say about that one is that there will always be people who are saying, no, Bitcoin isn't going to take over. Bitcoin isn't. But there's the key part at the start of the article already. This is an individual at a $1 trillion firm or $1 trillion inside investment, whatever. It doesn't really matter exactly, but these are big guys in the space. Very often, these are the people who don't want Bitcoin to succeed because it's newer tech, and Bitcoin doing good is going to, of course, take down many other different companies. Why do you think banks are all of a sudden so adaptive of Bitcoin, yet others are really fearful? Partially, it's the investment banks versus the more traditional banks. Even though all banks are inherently investment banks, it's mostly some that specialize on investment and others that specialize on just, I guess, banking, the other side of banking, I guess, just like maybe the more easy and safer route of things with more bonds, maybe. But the point being, a lot of these banks will adopt or try to work with or accept Bitcoin purely because they want to expand and want to keep up with the current scheme of things. A lot of these other parties and more traditional banks don't want to because they know the tech that Bitcoin has is really making the banks kind of obsolete. Also shows, of course, the inherent flaws with the system of being centralized all the way through. And again, the idea that you can become your own bank takes away the necessity for a bank that's needed. And again, with Ethereum and the DeFi realm, you don't really need banks anymore. You really kind of don't. What do you need them for, right? If you want to send money to somebody else, well, if everybody had the same type of crypto system right now, you wouldn't need a bank for any freaking thing. You want some yield? You want some return? Well, my bank, if you have more than $100,000, you're going to have to, euros actually, you're going to have to pay to keep your money on a bank. That's freaking ridiculous, right? It's really stupid that they want you to pay them to keep your money on there. I mean, from a certain perspective, it is logical. Had they not lended the money out, if they kept the money there and they asked a fee to keep the money on the bank, so for safeguarding, I could have at some point agreed with that because, again, it's kind of their custodian fee, right? Let's say, for example, it's 1% a year to keep your money safe. I would have seen some logic in that, but no, it's just because the rates are down, they invested, but at negative rates. It's such a strange system as it currently works. It's really odd. What's the perfect amount to invest in cryptocurrencies? Financial advisors weigh in. When it comes to investing in the new and highly volatile asset class of crypto, most financial advisors have at least one piece of wisdom. Don't put in more than you are able to lose. Quote, you do not want to be in a situation where you're losing sleep, end quote, one advisor says. My own personal, I guess, piece of advice would be to always make sure you can sleep properly if you were to lose all this money. And I know if you, for example, have $100,000 just in net worth, you put in $40,000. If you lose it all, you might not sleep properly, but at least you can't, most likely, right? You still can sleep because, well, you still have $60,000 or 60% of your money left. If you had $100,000, you put $99,000 in. If you lose all that money, you have nothing anymore, right? You have $1,000, but you're basically broke if you guys get my drift. I would always say make sure you have a balance right there so you're always feeling good. If all my crypto were to go to zero right now, I would cry. Yes, of course I would, because it's awful. But I would still survive. I would still be happy. I would still be satisfied with my life and with everything. That's the kind of balance you want to have. I've also expressed sometimes before, I always keep a stash in USDT. The main reason behind that is because I want to be able to buy the dips, but I also want to make sure that I'm always satisfied with the crypto prices. If crypto just goes to all-time high and then comes back down, some people are like, oh, I should have sold it all-time high. I never have that because I have some Tether or some euros on the side to just make sure I always feel good. It's just a little tip from Dusty right here. Now, here it says, Yadiwala had a client whose crypto exposure surged to 6% from 3%. She didn't recommend selling. I'm okay with them keeping that investment because I don't like when people are in and out of an investment too quickly, she said. It's hard to apply my normal rules of thumb for rebalancing, though, because crypto is such a strange fashion. Now, Alex Dahl, a CFP and president of Anfield Wealth Management in Cleveland, Ohio, has his own formula. He recommends clients don't invest more than 10% of their risky assets in crypto. So let's say someone has 70% of the money in equities and other in more volatile investments and 30% are in bonds and other form of fixed income. They could put up to 7% of the money in crypto. He's found clients often spread their allocation across different digital tokens. He said the most common ones are Ethereum and Bitcoin, which I found too. One thing I should also tell here is that the majority of these people who give that advice and who they give it to are people who already have wealth. And they're in basically the second phase, where phase one is the accumulation of wealth. Phase two is the basically the maintenance of that wealth. And as it currently stands, most people watching these videos are in the first phase that they want to get to, for example, $5 million, right? And the people that they're giving that advice to already have, for example, 25 million. And it gets to a completely different ballpark because you putting in 100% of your money is not even 0.0001% of the money potentially, right? It's just like, oh, you got to try some way to get a lot of money. If you put all your money into bonds, you might get okay. You might retire with more money than you had before, but you're never going to really get extremely rich, if you guys get my drift, right? So with crypto, it's the potential that makes it so appealing. And that's also why people put in higher amounts of money, because there's more potential to get something going. Here was an article about what Bill Gates has to say about Bitcoin, but we already actually know all about that. Bill Gates is not that bullish of a guy, but I've expressed before, if he never turns around, it's because he has a better plan for it all, I guess. Then he's going to either build something out, Microsoft's going to build something out, and there's a deeper little connection right there, because most billionaires that are in the tech game know that this blockchain tech is so extremely, extremely beautiful. In an interview with Bloomberg, though, Gates commented that Elon Musk has tons of money and he's very sophisticated. This is already a little bit earlier, though. So I don't worry that his Bitcoin will sort of randomly go up or down. However, while the Microsoft founder made clear that he wasn't concerned that Musk's fortunes would rise or fall with the crypto, he did warn others that might be considering large investments. He said, I do think people can get bought into these manias who may not have as much money to spare, Gates said. My general thought would be that if you have less money than Elon, you should probably watch out. And that's really good advice. If you have less to lose, theoretically speaking, you should be less at risk, right? But that's not the case. Elon Musk, by risking $1 billion, for example, or a part of his money, will always be rich enough to, pay for, let's say, 1,000 people's lives for their entire lives if he wants to. He will always have that. There's no way he can get rid of every single penny he has. It's going to be extremely difficult to do so. Getting rid of $100 billion is not that easy. It's not that easy. Whatever you do, he has enough in cash to last, all right? Point being, even if Tesla goes down to the ground, he'll always have enough. And people like us, well, we most likely don't. And then a little side note, guys, a lot of people were asking about my Bybit investment. We are down a little bit on that investment. Am I sad about it? No. I should have actually bought the dip right here, but I didn't because I forgot this account even existed. But the fun fact is our liquidation was 47 cents, and we're still in the trade, boys. So I guess that's pretty funny. This trade was open at about 77 cents. Why is it still open? Why haven't we closed? Well, because I kind of forgot to open one here when we went even lower, and I didn't want to sell it out for just like $800 or so in profit we were. I wanted either the big money or nothing at all, and that's still the current situation. We will not let it liquidate, by the way. I will buy if we actually get below 50 cents towards my area. But I might have to actually put some orders open to just buy once we get to 50 cents. So my liquidation price gets even lower and lower and lower. But as it currently stands, guys, I'm pretty excited about it all because I do think we'll just still make money with it. Trend right now is going pretty beautifully, and I'm just excited about this entire crypto realm, man. Come on, aren't you guys excited about it too, man? I'm excited.